And so when we look at Bitcoin and Lightning, Bitcoin obviously has limits on how much transactions can happen. And then also they're pretty slow, pretty long. I'm working on an article on it. I've touched on it in prior articles, but I feel like it does not get enough attention outside of the Bitcoin ecosystem. So Bitcoiners obviously know about Lightning, but it's still very under the radar for macro investors and the general public. So I'm trying to just explain how it works and why it's interesting and what problems it solves. I think that's because of years of analysis. It keeps pointing to the fact that money is broken. A credible solution that can improve that, I think, is really important. So I think it's one of the more important projects that someone could work on. So I would say it goes back to the initial problem we discussed in a prior interview, where the speed of commerce is different than the speed of hard money like gold. We had this big abstraction between, abstractions for gold and gold itself. And then you can centralize gold, and then you could drop gold altogether and have a fiat-based system. So one problem is that we have an inflationary system, and that's problematic enough in developed countries, but let alone in smaller and more developing countries. They have much higher inflation levels on average, and usually within their lifetime they experience a hyperinflation, and they just lose their savings if they were holding that currency. So that's number one, is all the inflationary angle. And then number two is the fact that it's mostly permissioned, and so you need permission from your bank to do things, and that can, again, in some countries that's pretty benign, and in other countries that are more authoritarian, and according to estimates from like Freedom House, the way they depict it, about half the world lives under something that's classified as authoritarian or semi-authoritarian. And so the combination of not having developed savings and payments technology that's pretty open and having inflationary currency is really bad for a lot of people around the world. But I think what Satoshi invented was basically the world's best ledger, right? So I think Darren Feinstein would call it triple entry bookkeeping. And another way to describe it is that it's ledgers. And usually ledgers correspond to commodity monies in history. But they don't have to, obviously in the current era. And so in that sense, the best ledger, the one that is, you can't fudge the numbers, it's not opaque, right? And so the combination of the best ledger with a hard unit of account in that ledger system is a pretty marvelous revolution. It's basically faster than gold, but more auditable and harder than fiat. And so it kind of acts as its own decentralized transfer agent and registrar, which is it's a marvelous technology. And I think he solved a lot of problems, and it's still very early on in its testing and adoption phase. So for both good reasons and bad reasons, people solve this as permissionless, censorship-resistant medium of exchange. So actually pretty early on in its adoption cycle, it's a medium of exchange was right there from the beginning.
Yes.
But it's not optimized for everyone just to buy coffee with it around the world, 1 billion transactions a second or whatever. That's not what it's meant for. It's meant for that censorship resistant money that's kind of everybody's backup money if you get deplatformed or if you need this in any way. And of course we can build layers on top of it to also make it everyday money. But I think that's the biggest thing, that it basically gave everyone the ability to have one, portable money, so you can self-custody money and then even bring that globally, which is actually really hard to do with gold or cash or things like that. And the number two is that you can then do a transaction that is very hard to block. First time I heard about it, I thought it was cool. Like I never was like, oh, that's rubbish or that's bad. But I was like, why can't someone copy it? Why can't, it seems neat, but I don't know how to price it. I didn't really fully get it. So I was always kind of like, I'm rooting for those guys, but I don't know. So only after multiple encounters with it did I kind of fully look into it and realize that there's something more here that I was missing. The first couple years of Lightning is very low liquidity. But we've hit kind of a critical mass now where it's quite liquid, and the wallet solutions and things like that are pretty good. So even though there's still work to be done, there's still limitations. It's now a very workable system with a very strong network effect. Entities will dismiss it or not even have heard of it because, total locked Bitcoin on it is, a little over 4,000 Bitcoin, which as of today is something like, $100 million. It's peanuts in the global scale. But I think if you're looking at how it works and seeing that it gets better every year, and you're seeing the growth rate and the rise in liquidity, I think we're reaching that critical mass. I think we reached it basically at the beginning of 2021 or so. And I think now we're firmly into the point where it's just increasingly usable system. So if I have a credit card and I'm buying something from you, your bank is taking a cut for accepting that card, and then my bank is taking a cut, and then the network is taking a cut. So there's multiple people. There's at least 3 parties along the way that are taking a cut. Yes, I mean, the way it's normally constructed is that the merchant really is paying the fees.
Okay.
So the user is not really paying the fees, and if anything, they're often getting rewards. I think now that Lightning is usable and liquid and increasingly developed, I think we're getting pretty close. I think we still need better, we still need years of development to make it better and better. But basically, it's turning into a full stack network. And so when we look at Bitcoin and Lightning, Bitcoin obviously has limits on how much transactions can happen. And then also they're pretty slow. And so that's fine in some circumstances, but it's generally not a good thing for 1 billion people to buy coffees with, right? There's not enough throughput. And, if you're doing an in-person transaction, if they want to wait at least for confirmation time, they're going to be waiting for a while. Yes, Lightning only works because the base chain works.
Yeah.
And so some of the initial designs of how to increase throughput were like, okay, we'll just add block size and block times. But then the problem is that individual nodes become so hard to run that you basically need to be a data center. You need enterprise grade bandwidth and storage to run a node. So the Bitcoin stack has instead gone vertical and said, look, we're going to keep the nodes small. Even if we try to change them, we can't, because you can't just push updates to users. They try the whole block size war. And so you have small blocks, small bandwidth, limited number of transactions. But then on top of that, you can have an arbitrary number of different transactions. You could just use fully custodial ones. Like if you use Cash App and you want to send Bitcoin to someone else, you can do that. But Lightning is interesting because you can still use it peer-to-peer while still getting that bigger throughput. So basically it's channel-based instead of broadcast-based. And of course, Bitcoiners know this, but I think the broader investment community is still very unaware of how Lightning works. With Bitcoin, every time you do a transaction, that propagates around the entire network. Thousands of different nodes record that for the rest of human civilization or however long Bitcoin lasts. Do you want every coffee transaction? Is that a coffee transaction so important that it needs to be like part of like global ledger? Imagine if every time you send an email, every email like server in the world had to like agree that this email was sent.
Yeah,
that'd be grossly inefficient for billions of emails. So basically, Lightning is doing that on Bitcoin, but it's all contract based. So it's not trust. You're not trusting the other person. You're only trusting the code itself. And so it solves multiple problems. One is that you can scale far more payments without scaling the base layer. And then number 2, you can have a far more private and fast type of transaction. Lightning basically happens in split seconds rather than you have to wait for 10-minute average confirmation times. Especially the sender has some privacy benefits, and I think that's still one of the areas of contention, to figure out how to make it more private, because it's always a cat and mouse game. There's surveillance companies that can open a bunch of nodes and then try to, as they're routing payments around the network, ironically contributing to the network, they're also trying to surveil, trying to figure out where points are going. But it is much better inherent privacy than the base layer and can be used in a very private way. And I think it keeps getting better over time in terms of privacy. That's a huge combination, because it's both a way to transfer Bitcoins around. That's obviously the initial purpose. But then, in theory, you can then put other assets on it. And so we've already seen that to some extent with Stripe. You can use this as a payments network in addition, even if you don't care about holding the unit. You can convert fiat currency to Bitcoin, send it over Lightning, convert it back to fiat currency. And yes, if you make a stable coin version of that right on Lightning, you can make that potentially even more seamless. But then years of more people joining the network, channels getting bigger and more connected, makes it higher and higher payment thresholds work. And I think one of the reasons it's dismissed is because it's so small and quote unquote slow growing. It's not like you can just flip a switch and then you have this like $1 billion DeFi casino, right? It's this slow grind up. And I think that's why it's not super interesting to someone who wants to make money very quickly, or who doesn't look at things that are worth less than $1 billion, because it's channel by channel. And at first it's one, it's the developers themselves. And then 2, it's like people that really want it to work and that will like help make it work. They're using it to build it out. It's like people using machetes to cut through the jungle to make like the initial roads, so that later like better roads can be built, kind of. So it was built channel by channel painstakingly. And after 2-3 years of that, Now we're kind of at critical mass. Like you said, you can do $50, $100 payments, no problem, on a frequent basis. And I think when we look 5 years out, I think we're going to see much bigger payments become the norm, or become sending much bigger payments will be much easier in Lightning Network. People in developed countries, they never wake up most of them don't wake up and think I have a payments problem. It's really hard for me to make payments. In the developing world, that's generally a much bigger problem. So one, it connects global labor, global work, global productivity in a way that didn't exist before. And number two, I think that this is where, in many cases, store of value will precede medium of exchange, in the sense that, I also, just like you, don't necessarily want to spend a ton of Bitcoin. I want to hold Bitcoin. I'd rather spend dollars because they go down over time. And when we add things like, there's frictions, right? So there's technically, if you spend Bitcoin over Lightning Network, that's a taxable event. And I think these are good for adoption over time. And I think it's also that when someone has a small percentage of their money in Bitcoin, they don't necessarily want to spend any. There are people that have been in Bitcoin for 5-10 years, and Bitcoin's a pretty big percentage of their net worth, and then they want to spend some of it. And the more merchants that accept Bitcoin, that strengthens the network even for people that are not spending it, because it makes it more censorship resistant. If theoretically no one accepted Bitcoin, and all we could ever do with our Bitcoin is go back to an exchange and put it back into fiat currency, that wouldn't be super valuable, because if governments didn't want that, they could just cut off exchanges. You saw in Canada, if certain addresses are coming in, they can try to blacklist them. If you have a few points of conversion as your only way to actually, actualize that as money, that's not great. But if more merchants accept it, even for people that are just hodling it, it's inherently a more valuable network now, because you have the optionality. Holding is the optionality to one day spend it wherever you want without anyone's permission.